in many aspects we're already ahead of the curve, yeah, because this is really looking at how, there's aspects there around financial inclusion and penetration. You've already seen our Timiza product has already addressed that. In terms of things like transparency and sharing our tariffs, we've already done that. In terms of sharing our pricing on loans on the KBA price calculator, we've already done that. So we take what we call treating customers fairly very seriously within the bank. So for us, frankly, implementation of the charter is not a particular issue for us, because we believe it's the right thing to do anyway. Even with the aspect of the small, medium, and the micro, small, and medium sized enterprises, I'd committed before that we would be lending well in excess of 10 billion shillings, which is will be much more than the 20%. So we don't really see an issue. We see that it's important that we should be financing this part of the economy, because I think it will create jobs and it will drive GDP growth. So that aspect we continue to do, and we will continue to invest. When you look at the multitude of bills that have been enacted, whether it's a new Companies Act, whether it's an new insolvency laws, whether it's the Movable Security Act, all of this has an implication on the way you run the bank. And then we've got obviously the interest rate caps, we've got the Financial Markets Conduct Authority, you've got this banking charter. As banks, you have to ensure that you comply, because if you don't comply, you could face sanction by the regulators. So there's going to have to be investments in the compliance teams, yeah. There's going to have to be investments in the reporting teams, yeah. And those, by the way, are not customer-facing teams. Those are what we would call back office teams. So I think there's always a balance between ensuring that we take care of the customer's interests, but not doing it at such a cost that it becomes prohibitive, because all those costs will find their way into the products and the ultimate customer pricing. So when we say it's complex, I think we're just going through a period where there's a multitude of new laws being enacted. And we've also seen that, I think, as a country, we've become more litigious. Yeah, people are very quick to rush to court around interpretations. Yeah, you just need to look at the budget process. Yeah, I don't think we've seen a budget process that has happened like this one, where it's read out, part of it is enacted, different parties go in, and then they actually come in with orders actually holding the implementation of the budget. That just gives you an example of how this is.
So looking at performance for half one, you see that our profitability has increased year on year by about 6%, where you see a profit after tax of 3.7 billion shillings, compared to what we had in the previous year of about 3.5 billion shillings. That's the 6% that I'm talking about. That is broadly driven by the balance sheet, which you'll be able to see that on the side of lending, net customer loans, that has increased by about 8%. I know we've had challenges, especially with the rate cap, and the biggest challenge we've had is really being able to price for risk, because once you have a cap that locks you at a specific rate, then being able to service the different categories of customers becomes a challenge. But then, having said that, you can be able to see that we are still, have an appetite on the side of lending, and any excess that we get from a funding perspective, you'll be able to see that we've put that in government security, which pretty much shows a growth year on year of about 34%. The day one impact for the whole industry was 1st of January, and specifically to Barclays. If you look at our balance sheet, the publication we've put in our papers, you see that that number is about 2.5 billion shillings just on day one. The comfort that we are driving after taking that, day one impact is that our capital ratios are still within, way above the regulatory limit and within our appetite, as a group. On the side of cost, tying to what Jeremy has mentioned, you see year-on-year cost picking up by 3%. But in these numbers, we have some restructuring cost. If we were to adjust for that, you'll actually see that costs year-on-year basically coming down by about 4%.